Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
Back to asset allocation and thinking about the portfolio resilience. And I think what I've been struck by is how traditional shock absorbers or safety trades have gone out the window in this particular conflict, whether it's gold, whether it's government bonds, as you mentioned the spiking yields there, and they haven't really acted as safety trades. The AI broadly was a bit of a safety trade against economic downturn, in the sense that there was capex coming. There was I believe that AI and big tech and the Mag 7 really was the linchpin for the US resilience over the last, say, 2 or 3 years post-COVID, when recession was pushed down the road. Now we have Jagdeep Bakhar from University of California, really high-profile allocator, speaking about shifting its AI stance, thinking about it from a risk perspective, not just opportunity. So where can we think about safety trades here? And how do we need to rethink some of the risks?
Yeah, I think it's interesting. I think it's difficult. So a lot of the safety trades work when you haven't got inflation. So the thing that makes the bond trade, or high grade fixed income govies, whatever you want to call them, is the presence of inflation. That essentially makes that as a flight safety position more challenging. And the rapidly changing inflation expectations. Let's be clear, because bonds can reprice to high levels of inflation. It's the change in inflation expectations that causes the problem. There's certainly the US dollar. People have talked about owning dollars, and as a generic view I've personally held, and I think LPP as a whole, we've held a view that not trying to be too clever and having a reasonable degree of dollars is useful in times like this, because there are reasons why people have said get out of the dollar. I get that. However, the US, until such time that the US isn't the dominant military force, dominant economic force, dominant cultural force in the world, at times of stress, people do go back to what they feel safe in. And the dollar is the currency, call it the settlement currency of the financial system. And the current US administration is very, very aware of that and trying to defend that position, let's say. So I think the dollar does still play a role in that, rightly or wrongly. If you move then on to some of the other things that you could look at, gold is interesting. You'd expect gold to perform in more stressed markets. I think it's probably because it's come off the back of an already significant run up for other reasons. Central bank buying, de-dollarization, debasement trades, all that kind of thing. And then you've got profit taking. And I think what we're seeing today, as I said, on how closely you've looked at the markets today, Finn, but gold has dropped. At one point it was down 6%. I don't know where it is now. I think it recovered a little bit. My suspicion is that's again liquidations, that's taking profits, that's funding margin calls elsewhere. When you need cash, you sell what you can, not what you want to. And I think that's probably what's happening with gold, but it has, as you said, hasn't performed in a way you might have expected. So we're having quite a lot of these unusual short-term things taking place. Some of the safe trades that you might have expected. So I'm not sure I have any great answers other than try not to be too clever, keep your leverage contained, don't be too concentrated. And I think to loop back to your AI piece, I think in a medium-term basis, I think AI probably is a structural growth driver. The challenge is which name. You know that probably a group of them, someone's going to win. It's very, very hard to see who it's going to be, though. And that, I think, is where the challenge comes from within that basket.